Welcome to another episode of Payments Pros, a Troutman Pepper podcast focusing on the highly regulated and ever-evolving payment processing industry. This podcast features insights from members of our fintech and payments practice, as well as guest commentary from business leaders and regulatory experts in the payments industry. I'm Carlin McCrory, one of the hosts of the podcast. Before we jump into today's episode, let me remind you to visit and subscribe to our blog, troutmanpepperfinancialservices.com. And don't forget to check out our other podcasts on troutman.com/podcast. We have episodes that focus on trends that drive enforcement activity, digital assets, consumer financial services, and more. Make sure to subscribe to hear the latest episodes. Today, I'm joined by Nathan Ottinger, president of Georgia Banking Company's Payments and Technology Banking Group, to discuss the current state of the payments marketplace. Nathan is a founding member of the Payments and Technology Banking Group at GBC, and in his role, he supports high-volume payments and corporate banking needs for clients in the payroll, HR services, fintech, insurance, and medical payment sectors. Prior to his role at GBC, Nathan served as head of fintechs and payments banking at Atlantic Capital for more than a decade. He also served as the senior vice president of technology banking at Silicon Valley Bank. Nathan, thanks so much for joining me today. I'm really looking forward to our conversation.
Carla, thank you. Great to be on and look forward to the conversation today.
Same here. Well, we'll go ahead and dive right in. So my first question for you is if you could tell me your thoughts about the current state of the payments marketplace and GBC's role within it.
Sure. Yeah, happy to. And, I think one word that I would use to describe the current environment, it's volatile. And you kind of use that kind of evolving term in the opening, and we wholeheartedly agree. Most of our clients that our team works with at GBC have some sort of payments need associated with their business model. And it's typically a high volume payments need associated with their business model. So I'm sure like many on this that are listening to this podcast have been following the consent orders that have been coming down and following the regulatory scrutiny that's going on in this marketplace. And that creates volatility. We believe that this regulatory scrutiny will continue to escalate, and rightfully so. And we see banks who have jumped into the fintech and payments world that probably aren't ready and jumped in from a business development standpoint without fully thinking through the nature of what was needed to support high volume kind of payments needs. And so that's creating regulatory scrutiny. You have fintechs that have probably been overinvested in marketing and underinvested in payments and compliance infrastructure. That's creating volatility. And you have regulators that have oversight of what's going on in the banking world, and they've really been overrun by innovation and the pace of change. That's creating volatility. And so we think this uncertainty is going to continue, and uncertainty is difficult in this environment because, as you well know, payments require certainty. Payments requires a very repeatable process, and you have an environment that has uncertainty and are causing unrepeatable processes. And it's something that we as a bank have been very mindful to be thinking about. So I guess the environment, I would use the word volatility. Now, for GBC's perspective, Georgia Banking Company's perspective, we've been trying to kind of stay very focused on industry segments and payments types that we've done for many, many years and time again. So fintech, it's very easy to kind of chase the shiny object. And that's not the tack that our organization has taken. And I think that helps us in this regulatory environment and this environment of volatility. GBC very much plays a treasury role with our clients. And many times that's around high volume ACH activities. And again, that's something that our team and our bank and our payments infrastructure is built around. So we try to stay very focused with the product types and the product offerings that we deliver to the marketplace. And I think that plays well during an era of volatility.
And something I'd like to kind of follow up on what you just said was, how does GBC engage with its clients in the payments and technology industry? And what does that process look like basically from everything you just said as it relates to volatility. So when you're onboarding a potential new customer, what does that look like through that continuing due diligence that you're doing?
Yeah, good question. And I think it goes back to the way we've built our team and built our infrastructure to have a very repeatable process. And I'll speak to that in just a minute. But I would also say that direct client relationships are very important to the bank and very important just really to our ethos of how we onboard clients. We don't like having an indirect party or a third party between us and our client. And that's been very important to us kind of over the dozen plus years we've been doing this as a team and as an organization. So I would say fundamentally, we want a direct client relationship with direct agreements, direct underwriting, direct compliance and oversight. So that's really important to us. And I'll kind of say that from the outset. And then I would say from a kind of getting to the question of how we engage with our clients, probably the best way to answer that is kind of step through the almost kind of sales to onboarding to portfolio management process. So this might be a little lengthy, but I'll kind of speak to that. So what I would say is really kind of the steps that we go through is one, from an industry and payment type, we stay focused. So we tend to be very focused on ACH. We tend to be focused on very B2B looking business models. And so that's kind of how we start the part of our funnel in terms of kind of the client types that we go after and prospects that we go after. So staying focused from an industry and payment type. Then we really kind of go through a term sheet process where we're collecting due diligence up front. And the due diligence that we collect up front are really kind of four buckets. So we have kind of a financial due diligence process, an operational due diligence process, a risk and compliance due diligence process, and then kind of a legal/data due diligence process. So we kind of build those buckets up front and we're collecting information up front as part of our term sheet process. And then we construct a term sheet that has general business terms, pricing, what have you. But we're also building out in that term sheet what our expectations are around due diligence and what our expectations are as the program launches around ongoing portfolio management. So that term sheet process really important to us to kind of set those guidelines up front. And frankly, that's where a lot of the deals die. And if there is a client type or a business model that doesn't meet that kind of upfront kind of screening and due diligence process, it dies there. And I think that's a good thing. It dies early and it dies before we get down the road of where a client might not be able to comply with our portfolio management and underwriting process. So term sheet stage, very important. And then from a due diligence process, I talked about those buckets, but from a financial due diligence standpoint, we're collecting things like financials. We're collecting things like personal financial statement if it's a closely held business, cap table, those sorts of ownership details. From an operational due diligence, we're collecting things like flow of funds. We're collecting things like client agreements. So really kind of understanding the nature of the product, the nature of the flow of funds, which is super important. From a risk and compliance bucket around due diligence, we are doing things like looking at return rates, if it's a ACH heavy kind of model, understanding kind of our clients' onboarding policies and procedures and due diligence that they do on their clients. We're making sure that we get our necessary audits, whether it be a NACHA audit or financial audit, things like SOC, very important that we dig in on as we're most often our client relationships are dealing with other people's money. And so that oversight and kind of review into policies, procedures, and internal control is really important. And then from a kind of data standpoint, I say data and legal standpoint, we're looking for things, privacy policies, disaster recovery, insurance, third-party risk management policies and procedures. So those items are detailed in a due diligence package that we give to our clients, again, kind of upfront, and that will guide our process through underwriting. And then finally, I'll end it at this point. Once we've gathered all of this information for our clients from a banking perspective, all of these clients have cross-functional kind of responsibilities within our organization. So assembling a cross-functional team that works on every single client relationship and there's well designated roles and responsibilities across that cross-functional team is really important for us. And once we've gotten to the onboarding stage with our clients, that cross-functional team approach is extremely important, not only to make it for a great client experience that the client has with our bank, but also a repeatable experience and one that can stand the scrutiny of oversight from our regulatory partners.
And Nathan, are you all predominantly onboarding these fintechs with a new idea and they're just trying to launch, or are you onboarding established businesses who may just be looking for a new bank partner or may just be having a different arm of business, let's say, or is it a mix of all of the above?
It's a little bit of a portfolio approach, I would say, kind of over the years. We'll have established businesses that are maybe looking for a second or third or fourth banking partner to their bank syndicate for ACH processing, let's say. There may be established businesses that are launching a new product and haven't been in the payment world before. So that is a prong that we'll focus on from time to time. And then I would say less likely, but occasionally we'll focus on a startup that has a new product, and maybe it's a management team that's been in the payments world and have started a new business and have received venture funding to start that business. So we take a portfolio approach to the clients that we work with, but I would tell you more often than not, it is an established business that may not be a fintech company, but it might be a business services company that has a high volume payment need that needs a bank to clear those transactions through. So to answer the question, it's really an approach.
And then going back to something we mentioned earlier, if you can discuss some of the important due diligence and ongoing oversight and compliance requirements that these payment companies need to think about when they engage with a bank, that would be really helpful for our audience, especially in light of all of the consent orders that we're seeing. It's definitely a focus from the regulators as well.
Yeah. And I would say it kind of goes back into those buckets. So I'll say from a financial standpoint, we're looking at going concern risk and making sure that the company is a going concern and has sufficient either profitability or funding behind them to maintain as a going concern. So it's not like underwriting a loan, like corporate loan, but there is meaningful financial due diligence that's done on that. And that is a cross-functional effort between the business development team here and our credit risk partners on within the bank. So that financial due diligence is an important characteristic. I would say we spend most of our time on the operational and compliance diligence that our clients have. And that takes various forms based on the nature of the business model. Our bank does a lot in the payroll and HR space. So I'll use that as probably a primary example, but the operational due diligence that we'll do is around kind of their software and their system of how they're going to get those payment instructions to us on a daily basis. And then the compliance and oversight that our clients' software system that they're using to send those transactions to us is well known and well understood and well documented. So that takes various forms as it relates to review of SOC, review of policies and procedures that our clients have to send data to us to make payment instructions out of. It gets into ACH audit. It gets into BSA, AML policies and procedures. So that operational piece is the most important, I guess, kind of gateway or toll booth for a client to onboard. And what I would tell you is when we are calling on businesses, if they don't have those policies, procedures, documents, audits in place, it's going to be really difficult for them to engage with us. Now, there might be other banks doing other things, but I would say we want a client that's thought through the risk management aspects of their particular business, their particular client base, and them coming to us with the answers to the questions we're going to ask. And sometimes there's tweaks around policies and procedures, and sometimes there's additional kind of scrutiny around policies and procedures. And most of the clients that we work with welcome that because, again, they're dealing with other people's money. But them coming to us with that documentation, with those risk management kind of tools in place, I would say is very important. And so that operational due diligence is where we spend most of our time. And I would say most of the document flow is back and forth. The third piece of that is really an ongoing portfolio management process that we have with our clients. And we think about that as once program is launched, make sure we're having regular check-ins on activities that where their business model may change, or they may be doing a new product or management changes, whatever it might be. So regular check-ins, very important. But I would also say ongoing review of policies, procedures, documentation, audits, financials, flows through from that upfront due diligence process that we're doing to an ongoing portfolio management process that we're doing. And so showing consistency of, okay, you've onboarded them, you knew these things at onboarding and documented as such and had proved it as such as a new client relationship with the bank, making sure that they're doing those things in an ongoing manner and updating as appropriate policies, procedures, documentation is an important part of our process. And I think will withstand and has kind of the regulatory scrutiny that's going on right now, because I don't know how well and widely adopted that has been across banking industry as it relates to kind of banking fintechs or non-fintechs that have a money movement need.
Yeah, that's really good stuff. And we've definitely seen, you mentioned the payroll industry, and I know you all are big in that space. There's been a lot of changes in the past, couple years now as it relates to money transmission and payroll. And that's something we're definitely seeing bank partners scrutinize as well as it relates to the payroll industry. I'm not sure if you have any specific thoughts on that.
Yeah, I think the first part is get good legal counsel. So, because it is, I go back to that word volatile. This is a 50-state process that our clients are dealing with. And having good legal counsel that's minding the ship on those matters is really important because it changes. And there are industry associations and industry groups that are monitoring and communicating different aspects of money transmission. Being in touch with those and being deep within those organizations is really important. And so it kind of goes back to my view of staying narrowly focused on industry segments and product types allows you to kind of navigate some of these choppy waters, because it's not like you're learning a new business model every single time or a new set of regulatory requirements every single time you're onboarding a client. And so the money transmission issue is an issue we stay focused on because our clients have to stay focused on it.
Yeah, that's great. And lastly, I just want to ask about some of the payment technology innovations that are reshaping the way that payments are made that you all are seeing.
I would tell you we tend to be a follower as it relates to kind of payment types. And we were fine kind of in that role because I kind of use the term kind of chasing the shiny object down the hall. And too many times you can get distracted as an organization chasing the greatest and latest thing. And Georgia Banking Company, we are a 1.8 billion asset size bank. So we need to stay focused on those things that we're good at. And for us, that has been ACH and risk management and underwriting and compliance around large ACH programs. So I would tell you from an innovation standpoint, things and tools that can help us as a bank manage our risk are most important and most interesting to us. And some of those are offered through core bank providers. Some of those are offered directly to a bank from non-core providers. Some of those are offered to our client partners for them to utilize within their software or within their process. So those tools and those kind of offerings in market to reduce fraud or to allow for kind of transaction monitoring, to allow for ease of client onboarding, I think those buckets of product categories are really interesting to a bank our size that acquires most of its product capabilities from our core provider, but don't see those tools as often available from our core provider that speak to specific industry segments. And I kind of think kind of payroll kind of in particular, transaction monitoring is an important tool there. Onboarding in a remote environment. So KYB, KYC tools around onboarding remote businesses are important tools there. So that's where my mind goes in terms of innovation. It's making process and procedure easier, but also making risk management more efficient. And that's where I kind of think about versus payment types. I mean, obviously we are focused on RTP and FedNow and kind of the capabilities offered by those payment rails. And we do see specific use cases around those payment types within the client base that we serve. But I would tell you that's not driving our investment activities, and that's not driving really the asks and requirements from our clients on a grand scale.
Yeah, that all makes a lot of sense. And many of those orders that we've seen that have come out have a BSA AML component to them. So having that software vendor in place that can help assist in that process seems like it would really be crucial for the bank to make sure, not only on its side, but that its partners also have those sufficient tools in place.
Yeah, without a doubt. And he read through those orders, and that is a common theme. And I would also say making sure that the organization, I mean, the banking organization is ready to take on that task of oversight around BSA and AML requirements from a downstream party, and making sure that there's alignment between what the client is doing, what the bank is doing today, and what the bank requires as part of a relationship with the underlying client moving the money. There needs to be no daylight there, and making sure that there's documentation that speaks to that from a bank standpoint is highly important.
Yeah, we've certainly seen some pitfalls in that area as well. Nathan, any other thoughts before we wrap up for today?
I think, the only thing that's, I guess, kind of guidance or advice or commentary that I'll provide is we think about day in and day out that we're dealing with other people's money. And I've said this a couple times in the discussion. And when you're doing that, the bar is very high. And I say that the regulatory bar is very high. The ethical bar is very high. And then I would say kind of the social and kind of ethos bar is very high as it relates to clients in this space. That's on a journey of making sure you're aligned. You're aligned between what your client is doing, what the bank is doing, and then what your other constituents require and need. So those three areas need to be well aligned. And that's not an overnight journey. That's a journey that takes a long time to do. And, when I read some of these consent orders that are out there and for learning purposes, I'm thinking about, is our organization well aligned around that high bar of dealing with other people's money from a client relationship standpoint, a internal bank standpoint, and a regulatory standpoint. So those are the things I think about when I read those. And just given the volatility of the world right now, that's what's top of mind.
That's all really great insight. Nathan, thank you so much for joining me today. And thank you to our audience for listening to today's episode. Don't forget to visit our blog, troutmanpepperfinancialservices.com, and subscribe so you can get the latest updates. Please make sure to also subscribe to this podcast via Apple Podcasts, Google Play, Stitcher, or whatever platform you use. We look forward to next time.
Copyright Troutman Pepper Hamilton Sanders, LLP. These recorded materials are designed for educational purposes only. This podcast is not legal advice and does not create an attorney-client relationship. The views and opinions expressed in this podcast are solely those of the individual participants. Troutman Pepper does not make any representations or warranties, express or implied, regarding the contents of this podcast. Information on previous case results does not guarantee a similar future result. Users of this podcast may save and use the podcast only for personal or other non-commercial educational purposes. No other use, including, without limitation, reproduction, retransmission, or editing of this podcast may be made without the prior written permission of Troutman Pepper. If you have any questions, please contact us at troutman.com.